All right, let the games begin. Good morning, everybody. Good morning, Cab, Joel, Ron, all you guys. Joe, Joel, Debbie, Farrak, Rob, Jay Roth, GWC, Jerry, nice to see you in here. Steve, nice to have you guys. It's good to be here today. I'm excited to be here today. Broadcasting from the motherland here in Sarasota, Florida. Guys, if you were with me yesterday, we test drove a new PDF that my brother and I are putting together for the education. And after test driving the new PDF, we made the decision that we don't actually care for it. So I did a lot of work this morning to come through. So we're going to try again today, guys. We're refining the education process. And guys, I really do. I'm looking for feedback from you when you have it. I think that we streamlined it even more, hopefully a little more simple. We've taken some of the feedback that other people have given and rearranged a little bit. So we'll see what happens here. But before we do anything, guys, we're checking news this morning, right? Today is Tuesday. Is today Tuesday? Today's Tuesday, February the 20th, and there's really not a lot going on until 10 a.m. That CB leading index. Um, no, we're not reinventing the wheel at all, Cav. It is 100% the same stuff. Um, it's just we're trying to make it better, right? That's all we do. We're in this constant state of trying to make it easier to understand for new people. And I think that you'll dig it. It's the same thing. It's momentum, termination conditions, and entry areas. But what we're trying to do is eliminate some of the noise that may be confusing, and really focus on momentum, really driving that momentum look. So, man, give me your feedback after class. I think you'll find that it's very, very similar, but it's a little bit different, I guess. So, guys, every morning I come in and I check news. I want to see what's going on. Today's Tuesday, and the only thing I have is the cheeseburger leading index at 10 a.m. And that's low impact. We're not expecting a big deal from it. Let me give you guys the link. But I check this every morning because when I have that medium impact, I have that high impact. Well, there's a potential for the market to react emotionally, to get that little erratic, kind of jumpy, herky jerky, bumpy kind of thing going on. And I don't want to be caught in front of that emotion. I don't want to be caught in front of what's going on there. So every morning I look at that, and then guys, everything that I talk about, and even everything that I talk about in the new format here, it comes from the education page. There's no secrets. There is no secret handshakes or here, let me give you a little and then sell you some more. Um, Man, maybe my brother's working on the website. But everything comes from nexgent3.com. That link was to the education. I'll see if I can go straight to the home page and then bypass to the education. Hmm, that's awfully slow. That's okay. Um, Let me see if it's, yeah, okay. It's the page is a little slow right now. That's okay. He's probably updating something. There it is. Yeah, it's definitely updating something. Everything comes from here, guys. The software user instruction, user guides and instructions, that's your NinjaTrader how-to. So if you are brand new and you're working on all these things like scaling charts and putting in stops and targets, from the software user guide and instructions, it even walks you through how to use your screen capture program, how to present pictures in the room to make sure that you're getting that feedback that you're looking for each and every day. Um, and then the second page is the tutorial section, guys, and this is where all the answers are. Everything that we talk about, how to go through the Fibonacci-based indicators, the logic behind them. And it starts the same way that we're going to teach today. It starts with trigger lines and then terminations and then entries. And it talks about consistent trades. And that's really how we're going to spend our morning, guys, is we're going to go through, and I created a slideshow. It's my first slideshow ever. I hope you dig it. But there is a skill set that NextGen is going to help you master. There really is. There is this, look, let me pull this over here so I can not completely mute you guys out. And it all begins with chart reading. Everything that we do begins with chart reading, guys. And it starts with chart reading because that's about 90% of your day. You're going to spend a lot of time looking at your indicators. You're going to spend a little bit of time of trading when the rules are met. So chart rating is really about 90% of your day. We're going to cover that, and you will understand within your first 30 days. Um, is that the one you promised to show how you beat John on the golf course? Man, Cav, I hate to admit it, but I didn't. He got me by 2 strokes yesterday. I had him on the front nine, and I fell apart on the back nine, and he turned it up on the back nine. He got me by 2 yesterday. Um, it was fun, though. We had a good time. Guys, we're going to talk about entries. We're going to talk about precise entries. We're going to take our ability to read charts to understand where the market is likely to go, where it's likely to stop, and where it's likely to continue. And then you're going to use those rules and you're going to be able to enter the market where the market is most likely to continue. And it's that pretty key concept that's going to allow you to reduce your risk. It's going to allow you to maximize your profit potential. And then we're going to talk about the trade management. We're going to go a little deeper into that than we typically do in this classroom. I've got some great pictures, some great looks. I can't tell you the hours that we put in over the weekend trying to put this together to give you guys the best of the best. And that was just kind of the topping off of the last 27 years that we've been doing the same thing. Mastering entry, guys, that's your relatively manageable concept. You're going to have entries down by the end of your first 10 days with me. And then we're going to learn how to do something with those great entries, how to get the absolute most out of them. So we're going to do this the same way that I've always done it. Guys, there's a step-by-step path to becoming a confident trader. And being a confident trader, guys, it's post your pictures in the room. Every time you take a trade, every time you do something, post it in the room. Tell me why you did what you did. Point out where you entered, point out where you exited, and tell me why you got in and got out there. And what we're going to do is we're going to work together, hand in hand, moving forward. We're going to talk about your chart reads. We're going to talk about your entries. We're going to talk about your exits. So the more information that you can give me on a chart, the better your feedback is going to be. And the second is using a spreadsheet, guys. Using the spreadsheet that Nexgen provides you. You're going to find it in the Nexgen Study Picks folder. But I'm going to show you a copy of mine, and we're going to go through why we are using this spreadsheet. Because the first page is your trade tracking. This is where you're going to record every trade that you take. Every winner, every loser, right? Every break-even trade. And the idea is that whatever we did on Monday, well, actually, we didn't do anything on Monday because it was such a nasty little holiday. But whatever you do today, you're going to come back tomorrow and you're going to take a look at those trades and you're going to ask yourself a few simple questions. You're going to ask yourself what worked. You're going to ask yourself what didn't work. You're going to ask yourself what kept you relaxed and felt easy, and then also what felt forced or made you nervous. And guys, a brief historical study each morning, it will prepare you for the day. It will accelerate the learning, especially if you're talking about the advantages. If you're talking about the advantages that you see, if you're talking about the feedback that was received. And what this allows you to do is it allows you to be just a little bit better every day. It prepares you for the day to repeat the successes and eliminate the mistakes. And this will accelerate your learning. From the spreadsheet, there's also your favorite looks section, guys. And this is where every time you take a trade that fits the rules, every time you take a trade that you want to be a part of your plan, because maybe it is the best of the best, you're going to put it into this green section, guys. And what you're doing is you're creating recognition through repetition. You are creating the ability to know exactly what it should look like to get you into the market. And by doing that, by seeing these pictures still frame, it allows you to almost slow down the market when it's live. And then finally, just to compound on that recognition, there's about 300 pictures of you guys using the software, 300 pictures of great longs and shorts, 300 pictures of management and things on the NASDAQ, termination conditions, patterns that repeat themselves. Guys, you've got a little bit on the entry sequence, whether you're going long or short. And then it's also got a little bit of management here. And that's not the pinnacle of management, but that's the brand new user management. So I'm going to drop my spreadsheet into the room for you guys, and I'm going to encourage you to use it a lot, to really make it your goal to fill that thing up. We're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. We're going to talk about the advantages that come from the high probability trend trade. You guys simulate, right? Take every trade that you think you see, post it in the room, and let's just talk about it. Let's make sure that you're learning to follow rules, that you're learning to give yourself a statistical advantage every time you're willing to put your money at risk. And we're going to simplify today. I'm really going to focus heavily on the high probability trend trade. There is a slew, if you will, of other trades available, and Nexgen teaches momentum trades and high volume area trades, but we're going to focus heavily on what we call a high probability trend trade this morning because the high probability trend trade is the trade that teaches you to become a chart reader. The high probability trend trade is the trade that teaches you to recognize advantages that are going to take you off to any trade that you want to take. And the high probability trend trade, guys, it's a pretty simple trade. It is a trade that only has three rules. Um, these three rules each give an advantage. There is strong triggers on a large chart, and that's going to provide you the advantage of momentum. There is no termination conditions on a large chart, and that's going to give you the ability to have room to reach your target. And then we're going to use an entry, a simple recipe for pinpointing where the market is likely to continue. And this is going to happen on a smaller chart. But each rule, one, two, three rules, provides three advantages. Three advantages is your recipe for a trade. So in the beginning, while you're learning to read the software, while you're learning to be comfortable, while you're getting to the points where you can recognize these advantages, I want you to allow it to be simple. And the easiest way to do that is to simply have two scenarios that can be true. Either your rules are met, you do have momentum, a clear path, and an entry area, at which point you will enter the trade without hesitation, or your rules aren't met, at which point you will sit on your hand and patiently wait for the rules to be met. So these three rules, guys, happen on only two charts. We're, again, simplicity. We're going to eventually work you into a third chart. But for the brand new user, you just don't need it because the large chart is like a broad stroke of a brush. And on the most current bar on the large chart, you're going to be able to understand the direction of the market. It's pretty simple. If the background is green, the market's going up. If the background is red, the market's going down. New users can keep themselves kind of in a safety zone by only following that direction. You're also going to establish the momentum of the market. And this is rule number one. And when rule number one is met, you will have an advantageous scenario, a market that's likely to push in the direction that it's going. And then it's going to define areas. And areas on the large chart can stop the market, can create a bounce. And we're going to use a little recipe to determine when that's happening. But the large chart really leads the way. And without the large chart telling you that it's time to look for an entry, you should never even turn your attention to that smaller, faster chart. But when the rules are met, when you have momentum, when you have a clear path, let's go look for an entry. And the entry is on the small chart. The small chart refines the broad stroke of the brush. It takes one bar on the large chart, and then it just allows you to see the internal workings of that bar. You'll see maybe 10, 20 bars on a smaller, faster chart, and we use this to refine the broad stroke and pinpoint exactly where the market is likely to continue. This continuation point becomes the entry for the high probability trend trade, and that allows you to reduce risk, and that allows you to maximize your profit potential, and that's your rule number three. So we're only going to do two charts, and we're going to do three rules, and we're going to begin with momentum, guys, and momentum is everything. Momentum leads the way, and momentum is pretty simple. On your large chart, when your small triggers break above the large triggers are wide, they're angled in the direction of the trend, guys. The background is green and the colors match. This is strong triggers. And when you have strong triggers, the odds are favorable for the market to continue up. When the small trigger lines are red, the large trigger lines are red. They're wide, they're angled in the direction of the trend. This is strong triggers. This is rule number one, the advantage of momentum. And when I have rule number one, the market is likely to continue in the direction of the trend. And we're going to introduce a new phrase. And this phrase is going to be the momentum phase, guys. So we're going to look at the bars just a little bit. And I want to remind you that this is your look. Strength. Strength breaks areas. Strength carries a market. Strength, when we have momentum, is when we look for that pullback on a smaller chart. And you're going to be able to identify it with this momentum phase, guys. This momentum phase simply means that the bars are outside of the large triggers. So if everything is going down, your bars are below the large triggers. This is the best look to sell Fibonacci resistance on a smaller, faster chart. When the bars are outside of the large triggers, this is the best look to buy Fibonacci support on a smaller, faster chart. Guys, this is one of the new introductions. Speaking to yourself, I am in a momentum phase, and a momentum phase works on the large and the small triggers. But for the high probability trend trade, guys, when those bars are outside of the large, the advantage is present. And then when it weakens, when the bars enter, we begin to lose momentum. And what you're going to recognize is there's a correspondence. When the bars are outside of the large, you'll notice that the small and large are separated. As the bars work their way inside of the large triggers, so do the small triggers. And that's that weakening phase. That's that loss of momentum. And this is the one that precedes reversals. This is the one that precedes deeper retracements. So we're just going to look for that best of the best look. We're going to look for that momentum. And when we have that momentum, when we're in that momentum phase, buying or selling a pullback on the smaller, faster chart, it is, Joel. There's nothing new. And like Cav said, I am not reinventing the wheel. We're just talking about it, looking at it, and we're using the language because momentum phase means that we have momentum. It's rule number one right into it. Guys, these tails are pullbacks on the smaller, faster chart. We're going to use these to study. We don't trade the tails. We refine that bar and we pinpoint entries. But when we go back and look at this historically, it allows us to study, to build a little confidence in those strong triggers. And this is my new favorite picture. My brother thinks I'm silly because I like this picture so much. This is the life cycle of momentum. This is odds favorable momentum, strong triggers, best of the best for shorts. This is what we're looking for the high probability trend trade. But as you grow with the software, what you're going to find is that there's opportunities beyond just the best of the best. And with both triggers down, when one of the small triggers works its way inside of the large, this is the first sign that momentum is slowing. You'll notice that the bars begin to return as well. And you can still take short trades if all the charts agree. And then as the market continues down, the bars enter the large. We're in that weakening phase. And both small triggers are inside of the large triggers. Well, now we have a weakened large trigger, a slowing of the trend, and anything can happen up or down. You're going to hear that in class all the time. You're going to hear odds favorable momentum, and then the flip side is going to be anything can happen up or down. And this is where short trades, guys, if there's nothing in the way, you may still find an opportunity, but they have to be managed aggressively without the advantage of momentum. And what you'll also see is when those weakened triggers come down and they find Fibonacci support or trade up into Fibonacci resistance, this is when these areas are more likely to stop the market. So scrolling back, guys, is everybody comfortable? Rule number one, especially if you're brand new, separation between the small and the large sets us up for success. Strong triggers break area. Strong triggers push the market in the direction of the trend. Strong triggers is the exact same look on every chart. Hey, Roku, nice to have you in here, man. I heard you would be here today. I didn't see your name. Guys, this is the look. This is the best look. And you can identify it as well just by the bars being outside of the large. This is our first rule, rule number one. And man, when rule number one is in place, we have the advantage of momentum. And this was our nice little segue to rule number two. Rule number two says, don't trade into areas that may stop the market. Termination conditions are false. Room to profit targets is true. And guys, it's really kind of synonymous. If termination conditions are false, well then because we sell pullbacks, room to profit targets are true. So what it does is that it keeps you from trading into areas that may stop or reverse the market. What you're going to find is that these termination conditions are where decisions are made. Termination conditions, I'm going to steal this picture for it too, are Fibonacci-based indicators that may reverse the market. It can be blue Fibonacci support or red Fibonacci resistance. It can be yellow one-to-one dots, cyan divergence low lines, and magenta divergence high lines. And then we'll also talk about three divergences in the same location. But these termination conditions can create a bounce. They're where the people in charge are making decisions, either to continue their path, to take profits, and maybe even where the opposing force may be entering the market. So we have this awesome recipe to make sure that we always have a clear path. And when we do that, it simply means that when price reaches an area, when your dynamic Renko bars come down and reach an area, whether it is Fibonacci support or it may be one-to-ones, if the trigger lines remain above the area of support, don't take any more short trades into that area. This is an area that may stop the market. And then to compound your chart reading, if your trigger lines are in that weakened phase, well, then this area becomes more likely to stop the market. You'll see it at support. You'll also see it at resistance. Stronger triggers into it. Sometimes you get a bounce and a retest. These weakened triggers, right? We're outside of the momentum phase. We're actually getting to the wrong side of the large triggers. We reach this area and we call this a pivot stop out. This is a great indication that this market may reverse at this area. It's never guaranteed, but weakened triggers at an area are very likely to reverse the market. So when price trades above this divergence line, breaks back down, that's what we call a pivot stop out. Pivot stop outs happen at highs and lows. We use those divergence highs and lows as a line in the sand. If the termination at a high reverses the market, well, we're going to call it a strong top. And I want you to see what happens after the strong top. We find ourselves in the momentum phase, right? We have strong triggers. We also have not reached the next area, which means that we do have room to our profit targets. And look at this. There's one of those tails, one of those pullbacks that you guys are going to refine on a smaller, faster chart. And I'm going to show you how to do that. But first, I want you to develop just a little bit of trust in these termination conditions because they happen all the time. And it's amazing just how often they keep us safe. Price with strong trigger lines reaches those divergence one-to-ones, even with the strength. It's okay to say to yourself, my triggers are above. Let's sit on our hands and let's wait. Let's see what the reaction is. And this is the picture that I love to share each and every morning. And man, I feel like I'm about to launch a space shuttle today. I've got so many pictures going on. Let me get this one up here and I'm going to show you guys just how important these simple lessons become to giving you advantages. The market is screaming down and it reaches these one-to-ones. And when it reaches the one-to-ones, the only thing that you have to do really is just ask yourself, hey, where are my trigger lines? And if your trigger lines remain above the one-to-ones or maybe Fibonacci support, it could even be a divergence line, all you have to do is say to yourself, no more short trades. This is a termination condition. It may stop the market. It may create a reversal. There may just simply be an untradeable fight. And that's exactly what happens here, guys. From support, the buyers push, but the sellers aren't done. And you'll notice that none of the triggers get through resistance. And then we don't have strong triggers. And there's about 30 minutes of these two duking it out. And then once they're done fighting and you guys sat on the sidelines and all you did is you pop some corn and watch the fight, eventually we get that momentum phase. We get those strong triggers. Eventually, from the top of the bar, we haven't reached the next area and we've cleared the previous. And guys, there's your little refinement process getting you into the market for the highest probability trend trade. So when a termination condition at a low reverses the market and gives you that momentum, guys, we're going to call it a strong bottom. If a termination condition at a high reverses the market, one of those key Fibonacci areas, we're going to call it a strong top. And that's the precursor for the highest probability trend trade that you can take. And then finally, there's one more look that I want to introduce you to. So the large chart, and let me bring up my picture here. The large chart defined direction. It did it with the color of the background, red or green. The large chart defined momentum. Those small triggers above the large triggers, everything working their way up, let you know that the market was in the best position to buy a pullback. And then the areas were defined as well, fibs, mid-bands, yellow one-to-ones. And if we haven't reached them, well, then we have room to the target, guys. And that means that rules 1 and 2 have been met on a large chart. But there's one more termination condition where we're going to use that smaller, faster chart. There's one more termination condition that's going to allow you to see change on a smaller chart that maybe you won't see so quickly on a large chart. And that's going to be three divergences in the same price range, guys. If you have odds favorable momentum, if you have a clear path and you see three divergences in the same price range, this is your opportunity to not go short. This is your opportunity to not go long because three divergences in the same price range may terminate the trend. Three divergences with the small triggers inside of the large triggers, remember that that weakened phase makes it even stronger. And then if you come to me with a little pattern reading experience, you will recognize that a second higher divergence, right? The third divergence is higher than the previous. Guys, that's a killer. This creates a head and shoulders pattern, creates a head and shoulders pattern, and that just adds fuel to the fire. So three divergences may terminate a trend. Three divergences with weak triggers makes it even more, a little more strength. And then three divergences. Give me 1 second. I got you. Three divergences with that higher pivot from a low or lower pivot from a high. That changes the deal. And Joel, you're asking what makes the divergences not true? So what makes the divergence no longer relevant? Is that what you're asking? Cool. So it is the same idea on termination conditions. The trigger lines are or the divergences are no different. And I'm going to show you guys the recipe for it. Let me find it, let me find it, let me find it. If price reaches an area and your triggers remain below, the area is not broken. There is no clear path. Strong triggers momentum phase can break areas. That's the potential to break. And then when the small and the large get above the area, we now consider the area broken. You remember that lesson, Joel? So the same is true on divergences. If this red fib were a divergence line, it's not broken. It has the potential to break. And ultimately, it breaks when the small and the large triggers get above it. That's an awesome question. And it's that simple recipe that lets you determine when an area is likely to hold and when an area is likely to break. So if it reaches the area, no trades into it, right? If it gets to the other side of the areas, small and large, well, resistance is broken. It begins to behave as support. We're going to look for that pullback if the rules are met, guys, and that stays pretty consistent. Those three divergences help you identify lows and highs. Those three divergences will not only tell you to not take that next short trade, but it'll also let you know if you're in a short that maybe it's time to get out, to cut ties, to get out of there and just say to yourself, hey, I may want to jump ship. Things are changing. Let me take my profits and wait for the next best. So, guys, that's the first two rules. Having the advantage of momentum, having the advantage of a clear path, and making sure that your large chart leads the way, making sure that the large chart gives you everything that you need. Well, once we have that, we're going to go to the small chart. We're going to go to that refinement chart, that smaller, faster chart, where we're going to pinpoint exactly where the market is likely to continue. And guys, we're going to do this with such accuracy that we're going to use a limit order to buy or sell a pullback at an area inside of triggers, guys. And that's the key, is the large chart says go. The large chart says up. The large chart says strength. The large chart says clear path. Everything on the large chart says this is a market likely to continue in the direction of the trend. So we're going to break down that one bar into 15 to 30 bars, and we're just going to pinpoint where the market is likely to continue, guys. So the idea on using the smaller chart, having a 100% consistent trigger line momentum patterns before you take that entry, before you look for that pullback. And when the large chart says the momentum is its absolute strongest and going up, we are going to buy a pullback, a tiny little retracement against that strength up, and we're going to do it at an area. We're going to do it at Fibonacci support. We're going to do it at yellow 1-to-1s. We're going to do it at a mid band. And then we're going to be able to use those same key areas in the distance for exits. So profit created by knowing each of these two levels, actively buying and selling the market with the odds of winning favorable prior to the buy entry. So you're assuring yourself, you're giving yourself the advantages before you ever enter the market. You're giving yourself the momentum and the clear path. And that small chart's just a little refinement tool to catch the long or to catch the short. Exactly the same. When everything is down with momentum, we're simply going to sell a little pullback on a smaller, faster chart. And this is what's going to get us into the market, guys. So when the momentum is strongest, we're in that best momentum phase, right? Room to the target from the entry spot, not the high of the bar. We're going to use the high of the bar to determine that we haven't reached an area yet. So guys, give me a Y if you're with me on this, because this is really where the magic happens. With this much momentum and having not reached the area yet on the top of the bar, it's the refinement process on the smaller, faster chart that allows us to reduce risk. It allows us to maximize profit potential. And this long, while it looks like it only has about $50 worth of work to do, because we are going to take that pull back to the areas inside of triggers, it actually has over $250 per contract profit before the decisions ever need to be made about reaching the next area. And your areas for entry, guys, it's going to be fibs, mid-bands, yellow one-to-ones inside, whoops, of favorable large triggers. So everything says up, the path is clear, and let me show you in this slide. Everything says down, the path is clear, the bottom of this bar is the beginning of the pullback. Your most current bar is the beginning of the pullback. The top of the bar, that tail, should be an area inside of triggers. And it's what happens inside of the bar that gets you back here. The small chart will have a lot of up bars during the pullback to get us to the best area. And then the room to targets is increased by selling the high at the area. We're going to sell high. Go in the other direction. When everything says up, the top of the bar is the beginning of the pullback to the areas inside of those triggers. And the areas inside of the triggers should line up with the bottom of the bar. So what we're going to do is the large chart says up, and the large chart says strength, and the large chart says nothing in the way. And we're just going to let the small chart shove us back to fibs, mid-bands, yellow one-to-ones inside of triggers. And this becomes the area where the market is most likely to continue. We don't buy the bars or the tails. We buy the areas inside of favorable large triggers. And we don't sell the tail. We sell the area inside of favorable large triggers on a smaller, faster chart. And by understanding where the market is likely to continue, that point, the areas inside of the triggers, well, then you also understand where the market should not go, guys. And this is such a key concept as you begin to manage trades. So generally, 4 to 5 ticks above the trigger lines, the market pulls back. It pulls back to resistance inside of favorable large triggers. 4 to 5 ticks above the highest point of resistance inside of favorable large triggers is where the market shouldn't go. It's where I don't want it to go if this trade is likely to win. So what I have to do is I place a protective stop, guys, and anything that wins 70 to 80% of the time, which is what this high probability trend trade puts you in a position to do, is obligated to lose 20 to 30% of the time. And because we know where the market shouldn't go, and we have that because we understand where it should continue, guys, we can reduce our risk. We can lose less. We can win more by having momentum and a clear path and taking that pullback. And notice that your trigger lines on the small chart are in the momentum phase. Key advantage. Because we know where the market is likely to continue, areas inside of triggers, we know where it shouldn't go. And guys, it's okay to get stopped out of a trade. It's okay to take a loser. I want you to get accustomed to taking losers, but I want you to learn how to take the correct losers. And the correct losers mean that you had direction, momentum, and areas on your side, that your rules were met. And it means that you took the entry at an area inside of favorable large triggers. And guys, if it ever hits that stop, that's the one that you want to hit the stop. That's the trade that you should never miss. And the cool thing is once you get a reversal bar in the direction of the trade, you're going to reduce your risk even further, about 2 ticks below that reversal bar, 2 ticks above that reversal bar. So your ability to pinpoint an entry is the first step in learning how to manage a trade. And what happens is when the reversal bar prints off the area inside of favorable large triggers, your stop is in place. And if you're long and then the price comes down and hits your stop, guys, you're going to take a tiny little loss, 3 to 4 ticks, $30 to $40 typically, right? 15 to 30 if it's the NASDAQ. And this allows you to take smaller losses to achieve larger winners. So understanding where the market is likely to continue gives you the opportunity to manage trades, to put your protective stops where it shouldn't go. So I'm going to ask real quick, just I want to make sure because I am using new materials and it's important that you guys are getting it. We're going to start everything on the large chart. Our rules say that the large chart leads the way. Our rules say that the large chart has to define momentum. We have to be in a momentum phase. And we do that with strong trigger lines. And when the advantage is in place, we're going to make sure on the large chart that we have not reached an area, and this is going to give us the clear path. Rules 1 and 2 set you up for success. Rules 1 and 2 tell you that it's time to look for an entry. When they're met, we go to the smaller chart. We refine it, and we look at and look for the areas inside of favorable large triggers. Everything is strong, and we're going to bounce back to support. Everything is strong, and we're going to bounce back to resistance. And that becomes your entry. That becomes your best of the best. And just putting it together, guys, your entries are your first 20 days with Nexgen. Your entries, getting in where the market is most likely to continue to the long side because of momentum and a clear path. Using that refinement process to get in where the market is most likely to continue to the short side, embracing momentum, embracing areas inside of favorable large triggers. Guys, is everybody comfortable with this very basic look? Entries become the most important part of what you're doing because great entries create manageable trades. Great entries allow you to understand where stop placement goes. Great entries allow you to take larger winners. Great entries allow you to take smaller losers when you incorporate this very simple plan. And then management becomes the second half of it, guys. And this is one of the things that I don't talk about extensively. And I'm going to give you we're going to start with a very basic management plan. We're going to start with a very pragmatic, mechanical, the same way that you get into the market with that very mechanical entry. And let's go through the whole process real quick, if you guys don't mind. I like this new format, guys. What do you think so far? I feel like it streamlines a little bit. When a termination reverses stuff, right? Price comes, goes up, triggers don't break. When this termination creates the full reversal, it's a strong bottom, guys. And this is a beautiful, beautiful look. And when that termination gives me momentum, look at the momentum phase. The bars are outside of the large. The smalls are outside of the large. This is the best of the best look for momentum. Hey, JW. And then, because price hasn't reached the area, I have room to the target. My path is clear. Because of this look, I'm going to turn my attention to a smaller, faster chart. And on the smaller, faster chart, rule number 3 says that I'm going to buy a pullback in an area inside of favorable large triggers. So that means I need to wait for a reversal bar. I have to wait for the beginning of the pullback, that small retracement in price that's counter to everything that the large chart says. And when I get that reversal bar, guys, I'm going to look for trigger lines. I'm going to look for large and synthetic. Your synthetic triggers are nothing more than the large triggers over here. These are moving averages. There's some technical jargon that goes into it, but basically, price loves to come back to these trigger lines. That's why our areas are buried inside. So we expect a retracement to the trigger lines, but our job is to identify the areas inside of the trigger lines, fibs, midbands, yellow, one-to-ones, because they give the market a place to bounce. In this window of opportunity, the woo if you're a Ric Flair fan, that's hard to say. From the highest point of support to the lowest point of support, guys, this is where the market is most likely to continue. This is that best of the best area. This is your entry for the highest probability trend trade. So you are just going to activate a limit order right at the top of that window. And you're going to say to yourself, there's no way I'm going to miss this trade. I'm not going to skip this long because I have momentum and because I have a clear path. And now I've pinpointed exactly where the market is likely to continue. This is my trade, guys. This is a trade that typically wins 70 to 80% of the time. This is a trade that creates confidence through the memory of success. This is a trade. Whoop, where is my internet? This is a trade that when you follow these three rules and you give yourself these advantages, this is the trade. That's the wrong section. That typically takes you to that next area, guys. And because you waited for the retracement, your risk is minimized because your stop goes where the market shouldn't go. And because you waited for the retracement, your profit potential grows exponentially because there's a further distance to get to that next key Fibonacci area. And you can move a stop just above or below the reversal bar in the direction of the trade and reduce your risk even more. So guys, the same way we keep it very methodical in the beginning to get into the market, the same way we allow it to be three simple rules, three definitive advantages, and that's the recipe for a trade. Um, I want you to embrace that same idea on management just in the beginning as you're learning to read your charts in the moment. Because if you're brand new, the charts move fast, right? Most people say that. They're like, Mark, it's just moving too fast and I'm not sure what to do. So everything begins with an awesome entry, guys. Everything begins with taking that pull back to the area inside of favorable large triggers. Let's see how long it takes that picture to load. And when I take the pullback to the area inside of favorable large triggers, when I'm in at the point where the market is most likely to continue, yeah, I can see it out of my right eye a little bit, Cav. Then I also know where the market shouldn't go, guys, and this is my initial stop. So give me a Y in the room if you're with me on that one. Because we know where it should continue, we know where it shouldn't go. And guys, if it hits the stop, that's a normal part of a positive equity curve. You will take losers. Roku, I will never tell you that you won't take a loser. Arturo, I'm never going to try and sell you that snake oil nonsense. The most successful traders I know take losers, but what they do is they trade patterns that provide a statistical advantage, and that's the entry inside of favorable large triggers. So there's nothing to do once you take that great entry. And if the market gives you a reversal bar in the direction of the trend, I'm going to reduce my risk a tick or two above it, guys. And once again, there's absolutely nothing to do. I'm either going to take a smaller loss or the market's going to continue on to my targets. So for the brand new user, and this aggravates my brother, for the brand new user, your first target's at $100, guys, and you're not touching anything. You're either getting stopped out or you're hitting the target. But here's the cool thing, is if you hit that target, and it's easier to hit, when you have this much momentum and a clear path, guys, it's difficult to not make it to $100, even if the market's going to come back for you. You get paid, you get confident, you feel good, the palms dry up, the heart slows down, and you're moving your stop to break even. Guys, break even is a ridiculous stop. It makes no sense at all. But you're going to learn to put it in the right spot as you can read your indicators in the moment. But for the new user, by getting paid and going break even, it just makes it easier for you to hold for the second target. And everything that we do when it revolves around momentum, we're looking for bigger targets, guys. But for the brand new user, let's get paid and get comfortable. And then if it makes it to the second target because you had no risk, because you've already been paid, guys, you're going to exit with $300. $300, it's actually a pretty awesome trade, guys. $300, if that's the best you do every day, that's a $72,000 year. Let that sink in. $300 a day is a $72,000 year. That's on 2 contracts. Turn it into 4 contracts and instill the exact same management plan, and suddenly you're up to 144,000. And that's what we do, guys, is we keep it simple, we keep it focused, we keep it pragmatic. And if you come to the spreadsheet, guys, there's that super basic management. There's that very, very methodical entry. And the idea is that we can go back and study this. And let me see. I'm not sure how to minimize my slideshow, so let me just see if I can close it. I'll end it. And the NASDAQ just tanked, didn't it? But look at this. Support broke, and it pulled right back to it as resistance, and it continued down. And are you guys ready to talk about another one of the looks? And guys, I'm going to, actually, you know what? We're going to talk about this look right now. Weak triggers with divergence from the middle of nowhere. Guys, we've all heard it 1,000 times, right? Pivot from space. It's not from an area. It's not a good bottom. It's not a termination that creates a full reversal. How many times have you heard me say that in the room? Great terminations come from areas. Is everybody comfortable with that? When you have weak triggers and you have divergence, when you're in the momentum phase, guys, look for the long. I'm telling you right now. When you're in the momentum phase, if you get a pullback before you hit it, guys, that's a great look because we're going back to the idea that momentum is the key, that momentum is the reason. And when you have divergence that's not coming from an area, that mid band is the most likely spot for the first bounce. And sure enough, it does. And then price reaches support, and all the trigger lines remain above, and look at the bounce. And then at price reaches support, and all the trigger lines are above, and look at the bounce. And now we're getting back to that momentum phase on the small triggers, and the small triggers are trying to come up and trying to give us that look, but we got to get through that divergence high, guys. We got to get through this trouble spot. This is your live chart read, but we can use the momentum phase, right? Into the momentum phase, weak triggers, divergence pushes to the mid band, and now we're witnessing the fight between the fibs. Price reached at the divergence high. How many trigger lines broke through that area? Not a one, right? So we hoped it would go up, but we didn't have a clear path. So Roku, this is one of the things that I want you guys to realize. And Arturo, this is one of the great things about Nexgen is hope says let's go up. Rules say let's be patient and let the area break. Let's let the small triggers work above it. We don't have to be in every move. We can just kind of be in the best moves. And it still hasn't broken. And support hasn't broken. And now what we've done is we've defined a range. I need to get below 76 in the momentum phase, or I need to get above 87 in the momentum phase, which means that these small triggers would have to roll to get me looking for shorts. And it also means that they would have to get above this divergence line to begin to look for longs. And look at the fight between terminations. And guys, if you get nothing else out of what we do, understand that the rules are designed to keep you out of fights. The rules are designed to keep you from hoping that the market continues in a direction. And we can identify that the market has a chance when the small triggers begin to break above. Isn't that it? But guys, consolidation is where people lose money. And now what did we get? Now we're getting those strong triggers. We're getting that momentum phase. We're looking for those small triggers to get above these pink 1-to-1s because this is the NASDAQ. But look how the market pulls back. And we're into the termination. So we're probably not taking this one. But guys, it pulls right back to support, right inside of triggers. And if you're looking for the long in the momentum phase, that's your best shot. Your risk is already established, and a second lower divergence is probably going to take you out of that trade. And that's going to be one of the management things that we talk about, being able to get the most out of each and every trade. Whoops. Sorry, guys, I went to my untitled workspace. I toggle in between spaces. Whoa, my crude oil is on the wrong chart, and I'm not sure why. So here's the large chart on crude oil. Where's my small chart on crude oil? Popped up on my wrong monitor. I'm not sure why. So let's take a look at what we have, guys. I do have strong triggers. I am in a momentum phase. I did have weak triggers in an area that caused the reversal. But I don't have areas inside of triggers, which means that even though this area has the potential to break, my rule number 3 is not clearly defined. I don't have fibs, midbands, or yellow one-to-ones inside of these, and it keeps me from guessing and hoping on midbands. It keeps me from guessing and hoping, and it really makes it a little bit easier. Let's see if my S&P charts are in the right spot. They most certainly are. Momentum phase, the market continues down, and I want you to see where the market came from. Price reaches resistance, absolutely no trigger lines break. That creates the reversal, and it doesn't look like there was an opportunity on the way down. So we're just in a holding pattern waiting for rules to be met. So I want to talk about how we can study, guys, how we can find our trades. So Arturo, this is for you. Roku, this is for you. This is for you guys that are learning how to recognize, how to build confidence, how to believe in what we're talking about. When I'm in the momentum phase and everything is screaming down, I want you to see what happens if I circle this tail. And if I scroll back to my smaller, faster chart, if I go to my refinement chart, where was that circle? There we go. If I scroll back to my refinement chart, let's see where the circle lands. Pulls right back to the triggers. The midband's just below it. But guys, that's an opportunity. In the momentum phase of the triggers, remember I told you guys we can start looking for that first shot a little bit. Absolutely beautiful. There's your entry, guys. These patterns repeat themselves on every market. The advantage of momentum is true, and it pulls right back to the midband, right inside of the triggers, because we're in that momentum phase. My synthetics are down here, but the only line inside of a trigger is what creates the bounce. So we're learning to develop trust, guys, and we're learning to develop the idea that you can go back. At the end of the day, do you want to see if you missed a trade? Go back and circle tails. At the end of the day, if you want to see if there was an opportunity that you missed, go back and circle tails. Put tails on there and come back to the large chart or the small chart. There we go again. Weak triggers divergence, guys. Remember to get you to the mid band. Let's see what it looked like right in the middle of the night. Once again, a mid band right at the triggers. In that momentum phase, the pullback to the small triggers. So guys, is everybody cool with this? Is everybody like, all right, momentum for the win, and when one line is in, there still may be a short? What did that look like? Well, it was a mid-band, and it was right at the synthetics, and there were only 2 divergences. And look how the market continues down. So for my brand new users, I've got to show this picture. Because when I am doing something a little new, and guys, I'm teaching just a little new today. I do like the material. I'm a big fan of the material. This is such the way it feels. Give me those images. There we go. There's Mark learning to be a day trader, guys. Taking in 1,000 concepts, taking in 1,000 ideas, and struggling to put them all together into a trade. So how do we make that easy? How do we make that the easiest process ever? We do it by breaking it down into individual parts. We do it by understanding momentum first, right? Understanding exactly what it looks like to have the advantage and making sure that you understand that that's the best of the best look. And this is what sets the tone. And this is what gets you even thinking about taking a trade. And then from there, simply making sure that price hasn't reached an area, because if it's reached an area, it may create a bounce. And we're going to use that trigger strength, that momentum phase, to understand when areas are likely to hold, or with the best of the best momentum, have the potential to break. And then once we get that, all we have to do is figure out that refinement process, guys. All we have to do is be able to understand that with all that momentum, with the clear path, the best thing that we can do is buy a pullback to support when it all says up, or to sell a pullback to resistance when it all says down. And guys, this is your first 20 days with Nexgen. This is the best of the best. This is getting you focused on having the absolute biggest advantage. So weaken triggers, right? No momentum whatsoever. Anything can happen up or down. If I couple this loss of momentum with no areas inside of triggers, do you see how easy it is to not hope that the short works? And that's really what I want you guys to get out of this. Rule number one isn't met. I don't have momentum. Rule number three isn't met. I don't have an area inside of favorable large triggers. And all that means to you, ladies and gentlemen, is that there shouldn't be a trade. And I like this little slide tool. If I'm missing one advantage, I can still look to use momentum in an entry area, right? If I don't have the best momentum, if I have a clear path in an entry area, I'll give it a shot. I'll manage it appropriately. But once I give up momentum and I give up an entry area, is a clear path really enough to get me to risk my money? And this is how I want you guys thinking every day. If all I have is 33% of my advantages, do I really want to take the trade? But if I have 66% of my advantages, if I have a clear path, if I'm at the tail end of momentum, and I do have a mid band right there, right at the triggers, is it worth it to try to make a little money? And that's all I'm looking for you guys to do right now, is to simply speak to yourself in terms of advantages so that you can understand. Divergence, divergence, divergence. And guys, do you see how the price bars are outside of the small? This is the momentum phase. Can you guys give me a Y if you see that? This is a new term for everybody. The bars are outside of the small triggers. We're in the small trigger momentum phase. We're in the fastest in the moment trigger phase. That's showing you change. And then if the large triggers roll, we're going to find ourselves in that momentum phase on the large triggers, which is the best look for a trend trade. When this comes with divergence from the weak triggers, when this comes from an area, you guys are going to learn how to capitalize right here. Somewhere right around those large triggers, which are essentially the small triggers, when you're in the momentum phase, let's see if we get a pullback, and let's see if it pulls back to these small triggers. And guys, that's a trade that Nexgen taught in 2004. When an area reverses the market, when there's a slowdown, when you find yourself in the momentum phase with the small triggers and you haven't reached an area, well, there may be an opportunity. And a lot of you guys will recognize this as that first trade. And typically this is what we call an HVA trade, which is a trade that we can talk about before the day is over. Because if I pull over a range chart, do you see how that circle lines up with a green high volume area line? This is a different chart. This will be your third chart, ladies and gentlemen. But we can pinpoint where the market is likely to continue from if it's going to continue up. It's the same idea. Momentum leads the way. A clear path is imperative. Let's define where the market is most likely to continue with this momentum look. Does that make sense? Because a high probability trend trade is nothing more than a momentum trade with a pullback on a smaller chart. Momentum trade with a pullback on a smaller chart. I'm telling you guys, the recipe is the same no matter what you're looking for. If you let momentum lead the way, things are outstanding. And guys, that's my first hour. I like the new materials personally. I'm a big fan of the new materials personally. Man, not again. Um, Love me a pullback. And I believe that there's a simplification there. And I believe that if you speak to yourself in terms of momentum, if you speak to yourself in terms of a momentum phase, right? The S&P or the NASDAQ absolutely tanked. Pull back to resistance, pull back to resistance and triggers, pull back to resistance and triggers, pull back to resistance and triggers. How many times do you have to see this before it becomes second nature? John, do you think it's good? And thank you. John's been with us about 30 days, so he started with the old version and you just saw the new version. I really think we can make it easier. So you guys that are brand new, I think you just got an easier path to success. But does everybody see it? I'm just circling tails. I'm just developing trust. and momentum. That's all it is. And guys, once you have it, holy shit, pardon my French, there's nothing that you can't do. And then when they're weak, let's hit the brakes. Small and large didn't get above the area. It never actually broke. And guys, now we're in the momentum phase. And watch how it pulls right back. And down it goes. Egads and little fishes. Ladies and gentlemen, that is your momentum trade when an area doesn't break. Right back to the mid band in the momentum phase. Egads again. Let's see if it pulls back to resistance inside of triggers. And there goes that momentum again, guys. I love this stuff. I hope you do too. NASDAQ is crazy. You have to be fast to watch the NASDAQ. We'll see how this termination condition works out, guys. I'm going to take 5 minutes. Thank you for a great first hour. The way this works, for those of you that are new, first hour we're going to talk about rules. And the fact that I'm done at 10 a.m. is awesome. Second hour, I'm going to start looking at the trades that you guys posted. I'm going to delve into management a little bit for you guys. I've got some new great pictures on that same slideshow that we're going to talk about. We're going to do live chart reads. We're going to look for the momentum phase. We're going to circle tails. We're going to see if it turned into a trade. And guys, we're just going to reinforce the rules over and over. We're going to go through It looks like we got to your picture. Small's outside of the large. Turn now. Pull back inside of favorable large triggers. Time to place an order. All right, so Rob, talk to me about which chart is which here. He used the embed option. Thanks, John. All right, so when you do, let's do this real quick. You've got Snagit. When you open the editor and you click share, screencast.com is the easiest way to do it. And then once you do that, it's going to give you that link, and you should be able to click on Get Link and then just paste it in the room. And I think your embed, maybe you took it from down here. I'm not sure how you did the embed. Let's see what that is. I'm going to click on that and see what it does. No. So Rob, when you do it, just right click on the picture and click copy, and then come over and paste that in the room, and I think that'll make it a little easier for you. One thing here, which is your large chart and which is your small chart? Because you've got triggers everywhere, brother. This looks like your small chart. This looks like your large chart right in determination conditions, which is okay. So I want you to do me, that's your 13 too. So I want you to do me a favor. On your large chart over here, Rob, right click on it and go to templates. And when you get to templates, I want you to go to load. And I want you to put 13.2 Rinko bar chart. And let it recalculate. Because right now I don't think you have the right template on there. Because see how mine has large and small, right? Yours has like two large and a small, and it's just kind of an odd look. And then the other thing, when you're taking your picture, this is one monitor, right? Just one? Okay. Can you see, like when you're looking on your monitor, can you see all of this information, or is it hidden? Okay, so let's fix some stuff for you. So I want you to come down. Are you in a techie mood? I want to get you to where life is easier for you. Do you see how if I hover over my NinjaTrader icon, it shows me um, all the charts down here? So I want you to do this. I want you to, it doesn't matter which chart, but I want you to right click on it, and behind it you're going to see a list. So if you just kind of move your mouse up, I want you to hit maximize. And what maximize is going to do, whoops, I did it wrong. What maximize is going to do is it's going to pull it and it's going to show you the entire chart and give you all that information. And then once you do that, click on the top bar and drag it down. And you'll be able to make it so that you can see both the top and the bottom of the chart. And if it's too big, you can get that up down arrow and you can squeeze it. And let's make it fit your monitor. And that way we can see the top, we can see the bottom, and we can really resize that and get both the charts to where they fit. But it starts with just being able to come through and right click and maximize. And it'll make it big, and it'll make it so you can grab it and put it where you need it. Let me know if that works. And then what happens, Rob, is you're able to take that picture, right? And you can start in the upper left-hand corner, And now we get everything, and we get that awesome look that makes it easier for me to talk about what you're seeing. Does that make sense? And guys, this is one of the great things about the class. It doesn't always have to be about every trade that's taken. You're right clicking. Do you see behind it? You'll see it pop out a little bit. So if I hover and then put my mouse over the chart and I right click, whoops, hover over the chart and right click, behind the charts, it'll give this little lineup. Man, this is one of those things where Jason could come through and help you as well if you wanted to get on tech. And just tell him, say, I'm trying to get all my charts to where I can see them on my screen. Oh, he could. I stink at getting on computers, or I would help you. I can try and walk you through it. Go through the tech. Don't email him. So if you really want Jason to help you guys, you have to come down to tech support, and I'll copy the link for you, and put in a ticket with him. And man, he'll get with you, and he'll get on your computer, and just tell him, say, I need to get it so I can see my whole charts. They're off in the distance, and I'm freaking out. He'll be able to help you out. Got you, John. All right, guys, so we're going to start with the feedback. Thank you for telling me that. So I'm going to scroll down. We're going to click on Mr. Tripp's charts. Here's the first one. And we're going to talk about advantages. We're going to talk about what we see, what he's doing. Whoops, let me click it again. Sometimes TechSmith doesn't give it to me. Here we go. So John, you had everything up, and it's a momentum style trade. You're in a strong trending market, and this is the key, is you let the area break, resistance becomes support, and on a smaller, faster chart, you take the pullback directly to support. Absolutely beautiful. First out at the first sign of trouble. Second one takes you to the next sign of trouble. John, everything about this is absolutely perfect. That is an outstanding trade, my friend. I want to say my brother took the exact same trade this morning. I was still enjoying coffee. And then on this one, let's see what we did. Moving so fast. Didn't see the blue fib on the large chart because you were focusing on the entry on the small chart. And there you go. So let's talk about a couple things on this one. Picked a reasonable entry. What does that mean, John? Let me go ahead and pull up the other two behind it too, so I don't have to go back and forth. What does a reasonable entry mean? Areas beyond all the triggers without momentum. So do you see how we've lost momentum, right? We've lost momentum at a fib, but even with the loss of momentum, John, I want you to check this out. Here's your triggers. Here's your areas well beyond the triggers. And then because it's NASDAQ, here's your small triggers up against you strong. And it's interesting that you didn't see the blue fib because it's also right here. It's the exact same fib. So it's divergence from a fib, no areas inside. But even if you didn't have the termination, do you see how you lost rule 1 and 3? This is a great one to miss. Does that make sense? Always speaking in terms of advantages. I no longer have the advantage of momentum, even if there isn't a fib there. And I no longer have areas inside of favorable large triggers. And it just didn't work out. And then on this one, the complete opposite, right? I have the advantage of momentum. I do have a clear path. And absolutely I have an area inside of favorable large triggers. And that was probably the easiest win ever. Up and then it crashed. That's okay. You hit both default targets. Beautiful trade. And guys, I think this is a great lesson. Without momentum, life becomes difficult. With momentum, John, you made it look as easy as it could possibly look. And then once again, with all of that momentum, because of the problem, you wait for it to get to the right side, and sure enough, you take it right up to the next area. So what is that? 3 for 4, and the only one that lost, John, is the one that didn't have odds favorable momentum. I think this is one of the greatest lessons we could ever have. Momentum for the win, ladies and gentlemen. I want you to embrace that. My brother and I sound like broken records talking to each other. Momentum, momentum, momentum. When it's there, life is good. Life is easy. Just wait for it. Nice job. Great trading, John. And thank you for the feedback on the first hour. I really do appreciate that. You've got to post your. I'm doing the quotation thing with my fingers. They're not stupid trades. What are they? They're amazing lessons, right? They are revalidating the idea that momentum kills it, right? Because there was momentum all the way to the termination. Then weak triggers at a termination. Look at the bounce. It didn't stop the market. It just created that gap theory. But simple rules help you identify. Awesome. Great job, man. And I hope you enjoy your day. Go make some kids smarter. And guys, now I'm going to scroll up to the top and we're going to take a look at everything that you guys have posted. Nicely done, John. So I'm going to go to the very beginning. I typically do these in order, but if you ever have to leave early, man, do not hesitate. Do not hesitate. Always, always, always post in the room. And just go, hey, Mark, I got to go. Can we look at my charts? And I will always say yes to you, I promise. All right, Joel, we're going to see what you did. Joel says, with everything going down, with the path clear, I'll take an area inside of favorable large triggers. And we get all the way down here, and I'm assuming maybe you were looking at that as an exit. And Joel, not a termination condition yet, right? It hasn't done anything. It's still going down. So not a termination. It's a loss of momentum. And I can't see the most current bar, so I don't know what it did. But it's a loss of momentum with weak triggers, which means that's a great spot for a push-up. Love everything about it, Joel. Great looking trade. Then Cab said, I heard Novak's going to be talking about momentum today. Clear path, strong triggers, both charts, momentum trade reach targets. And let's talk about the real look, right? Momentum phase, strong triggers, bars outside of the large, momentum phase. Bars way outside of the large. Small triggers way outside of the large. And Cab just says, with this much push in the NASDAQ, shouldn't be hard to grab a little cash. Man, Cab, I love that one. Rob is embroidering your robe right now. Beautiful trade. With momentum. Momentum for the win. No momentum for the loss, momentum for the win, momentum for the win, momentum for the win, momentum for the win. Ron, did I say Rob? Rob is my personal tailor, Ron. I am hiring him to assist you with robe making. He said kicking dirt in front of him. I'm in a different time zone. Give me a break. Awesome stuff. We saw John's. Let's see who's next here. We saw John's, and then Rob, we saw yours. Let me know if Jason gets you squared out. But let's look at it anyway. Rob, are you with me in here? So large chart. It's hard with these triggers just because it's difficult to get that best look. And maybe that's what it was, as I was looking for the next name. It's a weird look because I don't know what this trigger is. I'm not sure what the template is, but the smalls are outside of the large. It pulls right back. And I'm assuming that somewhere back here, there's a pullback to support before it gets to resistance. And now we should be in that holding pattern, right? Termination condition reached. All the triggers are below. We haven't gotten the turnaround yet. Getting close. And that's actually all. That's actually all of our pictures, guys. So let's go see what the live market's doing. Everybody saw the bounce off of support, right? And let's use this because when this was happening, I was thinking it was an outstanding lesson. Everybody sees the bounce off support, right? Price reached the Fibonacci support, the triggers were above, and look at that giant tail. So let's use the vocabulary that we learned this morning. Can we agree that we're in a momentum phase? Bars outside of the large triggers. That's a great look, isn't it? I just want to see where the pullback came to, just for grins. It's not the prettiest look. But I think that the idea here, guys, is once again, even when the look isn't the prettiest, momentum phase for the win, right? Momentum phase pulls right back, even with some trouble, right back to those synthetics, but momentum phase for the win. They're not all going to be your trades. But sometimes you'll be able to capitalize because the momentum phase says, let's go. Small's outside. Let's go, right? Let's get to that next area. Weak triggers gives me a deeper pullback. And we're in that moment. Directly into support. None of the triggers are broken. There's a divergence. There's a higher divergence. Guys, that's a very, very thing. You can't see my screen very well, but you know you don't have everything you do at the top. On crude oil, you don't have this. Rob, it may be time just to rebuild once and get a little fresh start. The very top of the bar. Which bar? There's so many. Where the circle is? This is where pictures helps. Take a picture of my screen and draw an arrow on it. That would make it easier. To the right of the orange. And see, I don't see orange anywhere. Will you take a picture of my screen and draw an arrow for me? Up here? Weak triggers, add an area. Creates the reversal, provides momentum. Up here, where it says chart, there's one pullback. What don't you have? I'm not even 100% sure. It doesn't say chart, you can't see it? I'm gonna get there. I always do. And that's where I was saying, Rob, what you have to do is you've got to maximize that chart so that you can grab it by the black bar and move it down and make it so that you can see it. You need to reshape your charts and get them into the window so that you can see everything. And that's where I'm saying just jump on with Jason real quick and let him do a little rearrange for you, and it'll help out. Or who's your salesman? Was it Mark Dean? Mark Dean may be able to help you with that as well. Not a trend trade. Weak triggers, divergence prints. I can never remember what that means. Right back to the reversal bar marker. So guys, here's a great example. of taking your chart read, taking your counter trend white bar really shouldn't work trade. That's it. That's funny every time too. So let's talk about chart reading, guys. Weak triggers, but a clear path. Divergence suggests a little bit of a push. Ron's created a plan that says typically that divergence push gets me back to this reversal bar marker, and it almost always does. It's not a high probability trend trade. It doesn't trade with the advantage of momentum. It doesn't even trade with direction. Because this is the kind of thing that you can set yourself up for when you understand how to read the charts. Because patterns repeat themselves. Off of a termination, when divergence prints, creates an opportunity. Works on any market. Base hit number 2. And then that second divergence suggests that that market may go up even further. And let's see if it did that. And that'll be a great segue. Well, they're fighting, aren't they? 1, 2, 3 divergences. We'll see if we get a higher one. That may push things up. Or they may grind their way down. Can everybody see the fight? One bar says the market's going down. One bar even says that we have a little momentum. All of these bars show the turmoil on the smaller, faster chart. So we're waiting for it to just line up, to get that clear path, to get these entries. 1, 2, 3 divergences, guys. They're trying to go down as hard as they can, but they just can't seem to do it. Oh, bother. So let's talk about management. We're in the best entry ever, right? Um, Let me find where my PDF went. Or my PowerPoint, whatever you call those things. I want to talk about some looks that might take you out of a trade. I want to talk about some instances that may change whether or not you're willing to stay in. The first one, of course, is um, if your stop gets hit. So if your stop gets hit, guys, exit the trade, right? Don't move your stops hoping and praying and wishing and wanting. If you put a pragmatic stop below the reversal bar and it gets hit, you're out of the trade, right? And you're waiting for the next trade. And that's a big one. Another look that can kill a trade is a second lower divergence from a long, guys. And it's a pretty simple approach. And this is one so funny. My brother incorporated the Ron Burgundy approach on this. Second lower divergence can kill a trade. Second lower divergence. Not a second divergence, but a second lower divergence from a high can kill the trade. And one of the easiest ways to use this as a management tool is to really wait for a signal to re-enter. It's okay to exit with the second divergence. And then if you get the opportunity, a new signal up, a bar, whatever, you can always re-enter, right? And if you never get that signal, well, then you don't take that larger loser. This was a pretty big one for me. This was a great one that I think helped an awful lot in getting the most out of trades, right? It used 3 divergences in the same price range. Third one's higher. This omits the first one, and it just keeps you on your guard, and it keeps you from giving so much away. And it doesn't mean that if the conditions are right, you're not ever going long again. You just wait for it to be right again. And if you get that reversal bar, well, then off you go. So, guys, that was a really good one. And that's a management idea that I think pays dividends over and over. And I'm looking to see if I can copy these pictures. I can't. I'll find them and I'll get them to you. I'm going to put this entire slideshow into the spreadsheet as well. And you also see it from the short side, right? If you take the perfect entry and 2 divergences print, it's okay to exit and wait for a down bar to take that next entry. And if it never happens, well, then you never actually take the next short. You don't take the next loser. Does that make sense, everybody? We're learning how to manage our great entries. Awesome long, Second divergence, let's sit tight, let's exit, let's wait and see what happens. If it gives me another signal, I'll take the trade. Perfect long, second lower divergence, I exit. If it doesn't give me the signal, guys, then I avoid that loser. Or if it does, I'm able to take advantage of that large chart saying that it's time to go. If it never gives me the signal, I avoid the loser, guys. That's a great one for management. You need to be able to read your chart a little quicker. You need to be able to process everything in a faster manner. And that's why when I introduce you guys to management in the beginning, it's very simple. It's very focused, and it keeps you from having to really read the small chart. But as you become a chart reader, you'll get better at taking advantage of the moves. So if you take the long trade, fits your rules, you're in, everything is good, and you hit these yellow one-to-ones on the smaller, faster chart, that's a great spot to take half your profits because these can create bounces. If divergence prints, exit your trade. Divergence from one-to-ones, even on the small chart, this is a management tool as you get outside of the basics, can ruin the party. And if there's a signal, you can re-enter, but there wasn't, and it keeps you from that giant drawdown. One-to-ones can create a bounce. That's why we take half our profits there. One-to-ones with divergence, ugh, that's ugly, and those tend to push. And that was a pretty good one. Short signal, everybody's in, life is good. Hit support, what a great place to get paid, guys. So if you are a brand new user, you took $100, you took $200, and you watched that market go without you. If you're an experienced user, you took that entry, maybe you took quick profits at the one-to-one, but that momentum phase told you, let's go to the next area. And sure enough, it did, guys. And this is how you're going to learn to get more out of a trade. You're going to be able to understand this look and get more out of each and every trade as you go beyond that $300 trade, that quick profit. And then the same thing, if you're in that trade and you reach that divergence high, take half, get out, get paid, right? Second, higher divergence, not lower. Add that one back on. The rules are still met. And I think this is an important part of it. Do you guys see the difference? A second higher divergence keeps me in the trade. Let me back it up. Here, a second higher divergence takes me out because it's a short trade. A second lower divergence takes me out. But if we go back to this one, the divergence is higher, not lower. And that's why management that's very pragmatic is easier in the beginning because you're calculating, is that my first or my second? Joel, small and large get above this one. This one's out of the equation. That's your first divergence. That's your second divergence, but it's higher. We're going to stay in this position. Smalls and large break the previous. We're back to our first divergence. Pushes you right back to the mid-band. Whoops, that's an empty slide. Gets you to the fib. There's your exit. And then you'll see 3 in the same price range, and that starts the reversal. So management's really the second piece of everything, guys. Management is the opportunity to take that great entry and find the best way to get paid. We got a big retracement here. 3 divergences in the same price range. We get a high push, and now it's coming back into the divergence low. It's coming back into the fibs. Notice that the smalls are returning to support. I'm not trying the short. I'm going to wait for it to break. Weak triggers with divergence. Giddy up to the upside. So guys, when we talk about looks that may reverse the market, we're talking about weak triggers with divergence pushing up. Odds favorable, momentum phase. If there's a pullback, where's the market most likely to continue? Right at that highest point of support, right inside of triggers. And guys, if the market goes up, so does your entry. Can I get a Y in the room? I'm not telling you to take this trade. I'm telling you that your rules are met. That you have the momentum phase, that it's strong. Why am I not telling you to take the trade, or why did I put my order there? I put my order there because my rules were met, right? I have an advantage. This is NASDAQ. I shouldn't be fighting these triggers, but we're going to anyway, just for the fun of it. With the momentum, the market's pushing up. I have a reversal VAR. My risk is reduced. So what's going to take me out? Second lower divergence, perhaps. It hasn't happened. The momentum is up. Should we use the divergence high as our first target? And should we use Fibonacci resistance as our second target? The only thing that's going to take me out of this one is the second lower divergence. If that doesn't happen, guys, this is the best look ever. Guys, do you see how fast the NASDAQ is? That can be terrifying for people. There's a lot going on in a little span of time. And I'm just keeping my stops where they are. If I get a second divergence, we'll exit the trade. If we never get the second divergence, we won't. But do you see how the large chart says up? How the large chart says the path is clear. The large chart's in that momentum phase. I love it. There's my second lower divergence. And look at the push that came right off of it. We're just going to leave it. We're going to see if the large chart wins. But that was our exit condition right there, guys. Since it happened so fast, I'll just go break even. And we're out. Would have been out sooner. But guys, that was the whole life cycle. And on the NASDAQ, it happens fast. Then the rules say, if I get a signal, maybe a close on the right side, well, maybe I'll take another trade with all this momentum. And if I never get a signal, whoo, see how fast that went? We got slipped. Then you don't even have to take it, right? If you never get a close on the right side, you never have to take it. Look at how much I got slipped on the NASDAQ, guys. That's one of the challenges with the NASDAQ. And now my stop doesn't make sense. 3 divergences in the same price range. Out it goes. All of the rules met. This is why new users shouldn't be trading the NASDAQ. Because the NASDAQ, well, you can if you want, but the NASDAQ moves fast. Weak triggers at a termination. 3 divergences in the same price range, right, Cav? But if you got in at the right space, and guys, I didn't try to take any profits on that one at all. We just talked about the entry. There was all sorts of money potential to be made. NASDAQ is the angriest girl you've ever dated in your life. But from 508 to 18, guys, that's $200 worth of profit before that second divergence ever hit. That was $200 of profit before it ever hit that divergence. And then there may be a way to re-enter, but I don't have any rules met. But I think that that's a great lesson, is you've got to understand that trades have to be managed, but there is the opportunity to make money before that management happens. And we kind of saw that there, and I didn't really play the management side of moving stops. Waiting for both triggers to get above 17,526. It still may go up, Cav, but you just don't have an entry, right? If you get to 17,526, well, then you have to be patient. Let's see what the small trigger is rolling. Just waiting. Waiting for the next best. That's your fourth divergence, right? Who knows where it's going to go? Wait for the next best. Does that make sense, everybody, how we did that? I pinpointed right where the market was likely to continue. That's all you're doing for 20 days. All you're doing for 20 days is pinpointing where the market is likely to continue. I just showed you how easy it can be, and I can show you how fast the market can move, which is why you have to be a chart reader in order to manage your trades. But if you weren't a chart reader and you had profit targets at $100 and $200, you made all 300 before all of this nonsense came to be. And now we're still in the momentum phase. And it pulled right back to an area inside of favorable large triggers. And there's your reversal bar. What do you think? Did that fit the rules? That one little line inside of triggers, but look where the synthetics are. And there it goes. Did it fit the rules, ladies and gentlemen? Sometimes they dance. Bingo is the word we say when we hit our targets. In at 518, Steve? I love it. Momentum for the win once again, ladies and gentlemen. And sometimes you've got to let your small chart finish what it's doing. And now we're weak triggers into resistance. No reason to hope and hold. Steve, nice trade. Guys, I'm not sure I can talk through that anymore. That's your perfect entry. That was your $200 profit target, lower divergence. You avoid all of this nonsense. And then when it breaks above the divergence and pulls back to support inside of the triggers, it takes you the rest of the way. Notice that the large chart changed very little during all of this. The large chart continued to say up. The large chart continued to say momentum. The large chart always said that this market was likely to go up. And guys, once again, this is NASDAQ, and NASDAQ is not for the meek. It's not for the people that are learning to read their charts. Crude oil is killing it to the downside. So learn your patterns, right? There's a pivot stop out. That's a termination. We're in the momentum phase on the small triggers. I'm not saying that there's a trade yet, but I have an HVA line for those of you that are going to learn that trade right there. Whoops. And I don't know if they'll make it. But when a termination with no triggers through begins to reverse the market, when your large triggers roll over, one of the next trades you guys are going to learn are what we call an HVA trade. And that HVA trade has you identifying this green high volume area. It's nothing more than a line in the sand from the buyers. And there's a potential trade where you enter right at the green line. And we'll see where it lines up on these charts. It lines up right at the large triggers, and it just might not make it. But that's what we call a high volume area trade, guys. That's when you get comfortable with your chart reads and you can incorporate a third chart. You can incorporate what we call a market flow chart. And it just uses a range bar instead of a dynamic Renko bar. And it's going to help you take advantage of these great bottoms, these terminations, these no triggers through areas, and utilize that momentum phase a little bit of the small triggers to take advantage. And it's pretty amazing how often it works. So, Cav, you took a trade in there, right? You posted one. Let's take a look at it. Management's the hard part, ladies and gentlemen. And then Cav, you love that momentum trade, right? Let it break, pull back, Momentum, momentum, momentum. There's that weak triggers with divergence. Um, I love it. Are you using, that was NASDAQ, right? Are you using the market flow chart yet? No? What was your entry price there? 12.01? Trying to see where you got in. You got in at 02. There it is right there. All right. Cav, I'm going to give you the keys to the kingdom on your market flow chart. Guys, this is something that my brother's been teaching. Cav, this is your entry right here. Do you see it? That's O2. Steve, give me a picture and tell me why. If you don't mind, that'd be awesome. Let's make it educational for the masses. All right, Cav, this is your private session. That was your entry. That was your entry. Yeah, but okay, so I know this is going to sound kind of whiny. Yeah, can everyone hear me? Give me a Y if you can hear me, please. Did I go mute? Okay, we're good. So Steve, what happens though if you say in at 519.25, people that don't know that you know what you're doing, they may just jump into the market. They may take your trades. So I always try to avoid you guys telling me where you get in. Show me where you got in because then it's after the fact and we're not doing anything like telling people when to take trades. So Steve, you might be a Yahoo that absolutely has no idea what he's doing. And because of that, somebody may follow you thinking that you're not. Does that make sense without sounding whiny? Um, oh man, I don't want you quiet because I think you're really good at what you do. I just want people to see what you're doing. And it's okay if it's not what I teach. It's up to you. If you don't want to share your strategy, that's cool. So Cav, check it out. All the momentum in the world, right? That was the first start. And let's go back to that terminology that we were using. Momentum phase, right? Even on the small triggers, momentum phase, Cav, do you see it? Start using that language when you're looking for these trades because it's paying dividends for you. Momentum phase on the smaller, faster chart. And here's the key. And the momentum rules as written say that the small triggers must break the area and then pull back. And that's exactly what happened on the one-to-ones. Are you with me so far, Cav? That's your trade on two charts. So I want you to see the look on the market flow chart. Do you notice that it's odds favorable momentum? That's the first key. Do you see how one bar came down and one bar went up? That's your look. Go back and look at your momentum trades and line them up. One down, one up becomes an awesome opportunity to take advantage of these trades. It's just a little bit of a modifier, just that little extra zip. And then the same thing is as this market pulled back, if you waited to get to the correct side of the small triggers, not fighting that immediate momentum, it gets you into the market at almost the same spot with an easier trade. So start lining up your momentum trades and just circle them on the market flow chart, and you'll begin to recognize some patterns that where once again it's momentum phase that's taking you through. And then guys, we're going to go see if I can be a chart reader real quick. Let's see if I can pull this one off. And I never want anyone to be quiet. 5/19/25. I was way back here, wasn't it? 1925, 1925. So check it out, ladies and gentlemen. And let me know if you follow along with me. Resistance. Steve, we're going to test my ability to guess. I hope that's okay. Everything says up. The market's cranking up. We start to lose momentum right at resistance, right? So what do? We say, hey, resistance with a couple lower divergences can push lower. And guys, it's the same thing from the management. We push directly to a midband, that continuation point. The triggers don't blink, not even a little bit. The smalls don't even roll below. There's your first reversal bar. There's getting above 1-to-1s and then pulling back to them. And that's about where 1925 is somewhere right in here on the correct side of the small triggers when everything says the market is likely to continue up. And yeah, it's hard to read, but that's okay. 34.5, you had triggers breaking through, pulls back to the midband. And there's your momentum phase. Buy a pullback. Pull back right at the fib. Correct side of everything. It's a little more difficult if you've never looked at this. Yep. I love it. That's the one right there. And guys, this is when you become a chart reader. You're good. Steve said this says down. I'm going to go down. This says up. And you'll notice that both of those revolve around momentum and a pullback. One wins, one doesn't. So no matter what your charts look like, right? No matter what your entry strategy is, no matter what you see, it's pretty outstanding that that's it. And here's a 34 looking for continuation. 8.3, there's your 13.2. Right back to support inside of triggers where everything is going up, but your momentum was down here on the correct side of triggers. 55.8 and 89.13. So you like that higher time frame too to work you through, huh? Not mad about that. And guys, what do you think? Everything says up, everything is strong. Two divergences says exit if you were in. Wait for the reversal bar. Wait for the signal from support that used to be resistance with a clear path. If you took this entry, guys, that's a pretty sexy trade. And then Cav, you're going to find this amazing, but right here was that same odds favorable momentum on your market flow chart. And this becomes a management tool. One down, one up for management when you want to hold for the bigger move. So rather than getting scared out of the move, you just put your stop below where the up bar should be, and it actually chases it up. It's pretty cool, and it allows you to get up there. And then one down, one up, your new stop is right here, and if it gets you, well, then you're out of troubles. That's management using that 8-range chart, guys. And Cav, that's going to keep you in these trades longer once you start getting comfortable with that pattern. And now we've got weakened triggers and a second lower divergence, guys. We're seeing the pattern again. NASDAQ's really putting it together for us. Weakened triggers with divergence. Off it goes. Right into resistance. Got to have a clear path. I feel like I'm talking a lot. How we doing in here, guys? I'm saying the same old thing, right? Over and over. When everything is down, look for a pullback, right? When everything is strong, look for a pullback, whether it's up or down. So what needs to happen here at resistance? We need to see some small triggers break, right? We need to give it a chance. And we're just not there yet. Weak triggers with divergence typically gets us to the midband. No triggers through the areas says, hey, let's wait a second. Let's get a couple points above that area with the triggers before we start looking for long trades. Even with strong triggers, when we reach resistance, both small triggers must be a couple points above that area. Otherwise, the fib may reverse the market. Even with strong triggers, the fib may still reverse at the market. We're not a couple points above. So far, we've got a pretty good push down. What do you guys think? Rules for the win once again? How many times do you have to see this to not be in there? And it still may go up, but now it's going up based on hope, not advantages. So good second hour. Look at me, made it to the second hour. Look at you guys, made it through the second hour. So when we get into the third hour, here's what I'd love to see from you guys if possible. First of all, Arturo and Roku, are you comfortable taking pictures yet with your capture software? You are? Haha. So here's what I want to see. And guys, I want you to try this because this is an amazing trick, right? Is open up your capture software. I'll use Snagit. And just take a picture of the large chart. Here, let's even take your large chart and tighten it up. Just like that. I'm going to hit capture, and I'm just going to take a picture of the large chart, guys. And I want everybody to do this. And let's just use termination. So you can use the box. Price reach support, no triggers broke, right? Let's use that recipe for termination conditions. And let's see. Let's start committing it to memory, right? And then every white box represents a point where, let's use the language, price reached an area, triggers remained above or below, termination true. And this is pretty cool because what this does for you is in one picture on one chart, you can start to see these things, right? So that is one termination, two terminations, three, four, five terminations inside of one picture. You're creating recognition through repetition. So the next thing, guys, if you're comfortable, let's do this. Let's take the same picture. Every time you're in the momentum phase, there's a tail, there's a tail, there's a tail, and the momentum phase is done. There's a tail, and this is a little small. You can make it bigger. But now what you're doing is you're saying to yourself, man, when I'm in the momentum phase, even if it's kind of ugly, that market still seems to push. Oh, there's one right there. So I'm developing trust in momentum. I'm developing trust in termination conditions. And what this is doing for me is it's keeping me focused on the absolute best look. None of my trigger lines broke. And that market hasn't continued up yet. It actually continues to push down. We're at the most likely spot. If it's going to go up again, that's it. But because I don't have a clear path, I have this willingness to not take this trade. I have this willingness to simply say, my path isn't clear. I'm just going to hold off a minute. I'm going to let it clear. It may go up. There may be reasons for longs. I don't have any in my plan. But what it does is it keeps me focused on these simple advantages. Joel, what is that? I think you only caught a portion of your picture. That's okay. I do it too. So Arturo and Roku, man, please just take a picture of what you see, drop it in the room, and let's talk about what you see. That's really what's going to get you to where you want to be. That's what's going to keep you able to recognize what's going on. And it helps me help you become a better chart reader. Um, and you don't even have to do the terminations and stuff. You can simply take a picture of what you see, right? What do I see? I see momentum. That's the one thing that I'm sure of. That's not how you spell it. The only thing that I'm sure that I see is momentum, right? And then maybe you pick this up and you said, hey, that's a term. And there's your first picture, right? There's your chart read. Getting in the habit of reading your charts. And then Joel, something went wrong. Let's see what we have. Strong top. So Joel, it can't be a 50-50 and no clear path, really, right? So it's a 50-50. The smalls are up, the termination is good, the smalls have broken through the area, and you're looking for a pullback to support inside of favorable large triggers. And because there's divergence, you're saying that you're willing to not take that trade. I love it. This is a great chart read. The termination that creates the reversal gave us the push to the bottom. The termination that's creating the reversal, let's see how far it takes it up. And let's go to the S&P and see what it's doing currently. Termination condition for the win, ladies and gentlemen. Rule number 2 kept you out of the long trade. And then Joel, the area breaks. When the termination creates a full reversal and gives you odds favorable momentum. Cav, there's your momentum trade. And then Cav and everybody else, there's the look on your range chart when the momentum trade rules are met. Pull back to the one-to-ones. Does everybody see it? A lot of you have access to this chart. One down into the area where we expect it to hold. One up establishes our risk. And off it goes. Pretty cool, right? Not through the area, and that's the one that gives you the bounce back. But once you break it and pull back, it's beautiful. Let me find it. So my brother sent one out, and let me see if I can find where he put it. Um, Maybe. I didn't enter, so I'm not sure. Or the area, Joel, possibly. And I think, Cav, I think this is the one. You've watched this one? That's the one. This is the one that talks about everything that he's talking about there, using it for stops, using it for longs, using it for... That gives you all of the basics of what he teaches over in that other room, what he trades live in that other room. And I don't know that there's much more out there for it just yet. Hold on, though. You guys know I like to give, right? This is what we put together for yesterday's class, and we did some revisions on it. Excuse me, some revisions on it. But if you come down and you get through some of this stuff and beyond the high probability trend trade, Cav, you work your way into um, the HVA trade, and it starts with momentum again. Hold on, where is it at? Nope, that's still a high probability trend trade. High probability, management, management, management. All right, so starting on page 19, Cav, as my voice cracks. Starting on page 19. HVA trades, momentum trades. It talks about introducing the third chart and what it looks like, and just that it's going to be a little different. Talks about the rules, sends you back to review the guide for termination conditions, making sure you're good. It starts talking about termination conditions, showing the pictures, using it for the HVA. And then when you get into the momentum trade, there's your rules. And here's your looks. And it actually goes through and talks a lot about it, Cav. So starting at page 19, I think, is where you want to start to really get the lowdown on it. Take some pictures. If you have questions about any of them, just post the picture in the room, and then we'll keep working forward on it. But I think it really does give you a little bit of an advantage to what's already seemingly a great plan. That one little bit of confirmation. And then it also gives you, so Joel, you were asking, and I couldn't see it at the time, do you exit at divergence? Well, if you're using that plan again and that range chart, do you see how it's one down, one up again? Guys, when I haven't hit the key area and everything says up and I've got momentum, it also gives you the opportunity to use this range chart to hold to that next area. And guys, that's next level, but we're getting into the third hour, so I certainly don't mind talking about next level. Because that is where you're all headed with your chart reads. Weak triggers with divergence. This is the NASDAQ, isn't it? Everything is rolling, 3 divergences in the same price range. We're going to see if I get the one up, one down look. I got the one up. So Cav, I'm in late, right? Where's our first target? Maybe the mid-band? There's my stop behind the up bar. That's a momentum style trade. The risk is minimal. The push is great, right? Should we take quick profits on one? Because quick profits are great, but Cav, I'm in way late. I'm in so very late. Momentum phase. Everything says down. I don't know where $100 is. 76.75. There we go. First target hit. Hell, go break even into the middle in the mid band, right? And let's just see how far it runs. But mid band's the first target. So let's use the range chart. We'll use one up, one down on the range chart now, Cav, and we'll talk about management. We've already been paid into the mid band. There's your one up. See how you have one down? And as that goes down, so does my stop. My stop literally chases the down bar. So a second bar takes me out. And if it continues down with the momentum, one up, one down, well, then I'm not out of the trade. Of course, I've reached an area. And we'll just see what happens. But this is how you're going to use it. This is kind of next level using it. And it's a pretty cool tool. Second bar takes me out. But the first look confirms my entry at the one-to-ones. And guys, obviously a mid-band, divergence, weak triggers, that's your potential exit. And now it's pulling into trend trade range, right? Now we're pulling back to the area inside of favorable large triggers. And you have to decide if you really want to get out at that point. But Cab, did that make sense? That was your momentum entry. 100% perfect, brother. And now we're pulling back into a trend trade. The window's still pretty big. And I say to myself, I don't fight these small triggers, so I'll wait for a close on the correct side if I feel like I want to take that short trade. I take a close on the correct side. We'll see if market flow gives us a signal. If it never does, oh, there it is. Super late entry. Divergence low represents the first trouble spot. First target hit, and then we'll just go break even. Such a bad trade. But that's how we're going to use the range chart. Never going to fight those triggers. And the best entry is up here, but I got slipped a bajillion points trying to talk and trade at the same time. Does that make sense? Your first one, you can exit the trade with divergence. There's your trend trade in the momentum phase. Right back to resistance inside of favorable large triggers. And Cav, that one had the smalls a full bar away. There was no reason to really wait. So pretty cool, right? This is what we do every day, guys. It doesn't have to be difficult. Let it be momentum. Let it be a pullback. But there's your next trade. That's you making money off of this rather than having to wait for this. Does that make sense, you guys that are growing with it a little bit? Now we have two divergences. Weaker triggers, but it did just pull back to the mid band. Small triggers above the reversal bar. We know on the NASDAQ that can be a problem. So we're being patient. We're waiting for a close on the correct side of the small triggers if this market's going to continue down, which means that if it pushes all the way up here, we're in a pretty good spot. We'll just see what happens. Guys, that's the second hour. Same looks over and over. Same looks over and over. I love it. So as we come into the third hour, guys, I want you to ask yourself, what do I need help with? What do I want to talk about? What do I want the focus to be in this classroom? Shanghai it. I mean, just take over, right? I'm going to take over the class because this is my education. Guys, I'll see you in 5 minutes. No, Joel, that's not an answer. You know better. All right, guys, I'll be back in 5. And let's get some cool concepts. Termination, momentum phase. The small triggers break above the fib, which means that the fib has the potential to break. Guys, it's so important that you realize that that is the potential to break. That is not a broken area yet because the small and large aren't through, which means that if you took a trade from a mid band inside of triggers, that what you're doing is you're taking a trade with the idea, with the hope that support or that resistance breaks because both triggers haven't cleared, which means that if you take the trade, your risk is established. Your first trouble spot is the fib, right? And it's okay to take quick profits. If a second divergence prints, you're out of the trade, right? If the area doesn't break, you're out of the trade. We're relying on the momentum phase here to carry us up, but it's not a high probability trend trade because we do not have a clear path. Does that make sense, everybody? This is where you start to get outside of the high probability. This is where you start to get into a medium probability scenario, which means that you're going to take it a little more aggressively. You're going to take it with a little less risk if possible. Everything's going up. Maybe at this point, you tighten up closer to break even as you get up on that area that's creating a problem, right? And you have a willingness to not hit a home run on this trade because the area never broke, because you started to lose momentum. And it still may go up, guys, but you have to manage these aggressively. And we'll see what happens. We'll come back and revisit it. What do you guys want to talk about? Whew, NASDAQ. The shorts worked. Gotta love it. Look at the fight on crude. So let's see what we have for this last hour for you guys. I'm going to share with you the KISS trading plan. And this was put together for the brand new user, guys. This is put together to optimize your chances of success. With a high probability trend trade, with a 50-50 trade, that area with the potential to break. And this was designed not to shackle you, right? This is a stepping stone. And it's a stepping stone that tries to get you winning more than you're losing, that tries to get you focused on advantage, that really focuses on getting you into the market at the best of the best spot. And it's going to be through simulation, through study, through class feedback, continuous practice. You're going to create a plan that's catered to what you need it to be. You're going to create a plan based on your experience reading the indicators. So the better you get at reading your indicators, the more precise your plan is going to become. The simple plan, really, guys, never fight large chart direction or triggers, right? Never go against that momentum phase. Always be with that momentum phase. That's going to be the key to success, especially for the new user. Define your entry for the high probability trend trade. Make sure that you have that momentum. Make sure that there's nothing in the way. Make sure that you're in at the areas. And guys, I've never had anyone follow this and do worse than 70%. Keep it very mechanical, very methodical in the beginning. And then once you get through your entries, right? Like 2 or 3 weeks, guys, you're going to be great at entries. You're going to be able to recognize where the market is most likely to continue. You're going to find yourself taking these great entries and then not knowing what to do with them because you're still not 100% on the chart reading, but you're so much better than you were. So keep your management very pragmatic in the beginning as well. Keep it very methodical, very just focused. Get in at the right spot. Put your stop where the market shouldn't go. Use those reversal bars to minimize risk. Get those quick profits, get out and wait for the next opportunity on these high probability trend trades. And then you're going to begin to develop over and over every time you take a trade, you're going to start to recognize when that momentum says that you should hold for bigger moves, or you're going to begin to recognize when multiple divergences say that it's time to get out. And guys, that's kind of the beginning. And most people spend a couple weeks really learning, getting comfortable with this one. It's something that you can teach yourself. You can accelerate by going back and circling those tails. You can accelerate the education process of finding these great entries simply by using those tails on the large chart. Circle them every time you have that great momentum. Does it line up with an area inside of favorable arch triggers? Create recognition, guys. Take 15 pictures a day because 15 pictures a day puts you at 75 a week, 300 a month, 900 over the course of 90 days. And it's difficult to not recognize these looks if you're taking all those pictures and annotating charts. And then the second trade, and this is the one we're going to look at on crude right now, is that 50-50 trade. When an area is not broken, when you have, not crude oil, was that the S&P? When your small triggers break through the area, but the large triggers don't. And this is designed to give you the best chance of success on this trade, guys. Having odds favorable momentum, strong triggers on the large chart is imperative. Strong triggers on the small chart is imperative. And I want you to see this next one. No divergence on the small chart. No divergence on the small chart. That keeps you from having to manage this trade. And we do know that a second lower divergence says get out. We also know that three divergences in the same price range says get out. But on this medium probability 50-50 trade, that divergence should be enough to keep you out of the trade. And then it reminds you that divergence kills the trade. And then the management kind of goes into the same thing, guys. If you do take the trade, you've got to recognize what your troubles are, and you've got to be able to take them quickly. So I'm going to give you guys this KISS plan. I've had a lot of people already getting funded on those prop firms by just following the KISS plan, by keeping it a little boring in the beginning, guys. And it's a little boring only taking those trades. But what you'll find is that when you get really good at these trades, you begin to find more opportunities. There are more entries. There is more opportunity for money. You just have to be able to do it. There's three divergences in the same price range saying this push up was likely to happen, and it took a little bit of a dance, but sure enough it did. And the large triggers never rolled, right? And you're waiting for rules to be met. You're waiting for everything to line up to give you the best of the best. NASDAQ's having a bit of a fight. Crude oil is having a fight. Weak triggers gets you right to the mid-band. Pivot stop out gets you right to the mid-band. Pivot stop out is starting to push up. That's the not my money phase, guys. That is the my rules aren't met. I'm cool sitting on my hands doing nothing phase. So, Dwight, any questions? Gary E, nice to see you in the room. Jose G, always nice to see you. Any questions? Ron, how you doing? You working on a new trade yet? Cav, I'll be excited to see your study on the momentum. You are? Awesome. Keeping it simple, keeping it focused. I like to show this one. And I think that this is how easy it can be if you let it be. Because the process leads to the money, guys, not the other way around. So it's pretty simple. If the background's green on my large chart, this is my look, right? If the market is red on my large chart, this is my look. And there's really no exceptions. I know that this is the look that tells me to buy a pullback, whether it is buy to support or sell to resistance. And then I'm going to couple it, making sure that I haven't reached an area yet, right? And then I'm just going to refine it. So step by step, make it easy. Don't overthink it. Termination's creating the push once again. It's amazing how often that happens. It just never went up, did it? It still might, but I have to wait now. I have to wait to be back on the right side of things. And then there's the NASDAQ. Weak triggers, divergence, momentum phase, pulled back to the mid-band. If you took it, your risk is established, and it doesn't look like it's going to finish the move because we're fighting those small triggers. fighting the small triggers on the NASDAQ, guys. It rarely works. Which means if this market's really going to continue up, that a close on the right side is your best chance of success. With triggers up, triggers up, triggers up. And if it never happens, then you never have to take the trade, right? But we're not in the momentum phase anymore. The smalls are not outside of the large. It's not the best look. But that divergence with weak triggers suggests things could push up a little bit. We'll see what happens. And the cool thing is if you never get a trade, if you never get a bar, well, then you never enter the trade. You just sit there and you watch it. And look at that. Never got a close on the correct side. Now we're on the wrong side of everything, aren't we? Makes sense to just relax for a second. What do you guys want to talk about? We've got another 25, 30 minutes. I'd love to talk about what you want to talk about instead of my gums flapping. If you want to trade the account, you sure do. They won't activate your funded account until you pay the fee. That was finally your close on the right side. What do you mean, will they take it away? Will they take what away? I will, Gary. I'd love to. Thank you for asking. Will it stay in limbo? So the way it works, TLC, is let's say I pass my Apex account, right? So I'm trading, and we'll see if... So I'm trading, let's say it's a $50,000 account, and I get to $53,005, right? I'm paid. So what they tell you to do is stop trading. No more trading on the evaluation. After 5 p.m., they'll send you papers to sign, payments to make. Once that's done, 2 to 5 hours later, your funded account is live. Your SIM account is no longer. That's it. Your evaluation is gone. It's done its job. It's no longer yours. If you fail your funded account, you can't go back to that account and keep trading, right? Does that make sense? So it's done. Once you pass it, your evaluation account is over. There's no more. Is that what you were asking? Oh, I don't know. Um, I think that would be a better Apex question. Why wouldn't you pay the fee? I mean, I guess we can't always pay all the fees all the times, right? I don't know. I don't know what the time limit is on that, to be honest with you. It's never occurred to me to wait to pay the fee. Oh, okay. I would reach out to Apex and ask that question. Let's see if the Google webs have it. Hold on. How long do I have to pay fee for Apex funded account? Just for grins. Let's see if it comes up. I don't know. It might be in there. 3 to 7, you said? I'm not sure. Okay, there you go. Thanks, guys. I knew somebody would have the answers. Rob, you'll just have to make it so that you can see it on your chart. Take a picture, and then once you take the picture, you have to go to settings, I think. I don't know. I've never done it before. And then probably display and maybe background or something or personalization. And for background, you can add your picture. So you'd have to take the picture and then just add it in. I've never actually done that. All right, so let's talk stop placement, Gary. And let's see if we can find just a really nice high probability trend trade that allows us to do it and make it easy. Let me come back to 1047 real quick. All right, can we use, no worries. So let's actually, you know what? Let's go back to the most basic point first, to the most basic stop theory in the beginning. Hold on one second and I'll get there for you. I'm trying to find all my pictures. I've got so many. So here's the really crux of what we do. TLC, it has been stated in the other room and by people that have done it that your best risk to reward is the 50,000 account. Um, that's what I have. And then some traders will tell you that $2,500 drawdown isn't enough for them. People that take more trades, that take a little more aggressive trades, stuff like that. People that hold for longer moves. Um, oh, contract size? I trade a two lot because I don't want to be over leveraged. I trade two, Steve, but I'm a quick profit taker. My first contract's off fast, getting me paid. So I have a little, yeah, on the 50,000. My brother thinks I'm crazy for trading the Nasdaq on a 50,000. He's like, dude, go get the 150 and give yourself some breathing room. But I feel comfortable with what I'm doing with it. But everybody's different, right? Everybody's different. Everybody has a different, guys. My brother is, if you've ever watched Braveheart, um, yeah, there you go. So Steve, bigger's better for you, right? I use a lot of chart reading to figure out what I'm going to do and where I'm going to do it and how I'm going to do it and where I'm going to get out and I'll get paid. Yeah. So yeah, my brother's the guy in Braveheart. He's the guy at the beginning of the battle charge with the sword drawn. And he's just going to whoop your ass. He's going to put himself right in the kill zone because he's so good at what he does. I'm the drummer on the back row, man. I don't want to get stabbed. So I tend to be a little more conservative. But we both read the charts the same. I'm just not at his level. I hate to admit that. I hope he's not listening and he hears me say that. I'm just not at his level yet. So I'm a little more conservative. You have to understand how you trade. You have to understand what your aggression level is. You have to understand whether you're comfortable taking profits here or if you have to let it run to the next area, right? And then once you have an idea of how you trade, you understand what sort of trailing stop that you really need. But on a $50,000 account, I don't go past two contracts. Take care, Cav, because that's just over leveraged, I think. So, Gary, the idea, sorry, I'm like a squirrel, right? I see a squirrel. So, initial stops, Gary. And I don't know what your trading plan is, but if you're getting in for the high probability trend trade, the initial stop is simply where the market shouldn't go. If we're expecting areas inside of favorable large triggers to stop it and make it bounce, well, then your stop is 4 to 5 ticks above if it's a short, or 4 to 5 ticks below if it's a long. Are you comfortable with that? Are you trend trading? Because I really think that is like the best of the best. When you're talking about stops, um, let me see if I can find a good example. And here we go. If I entered, let's take a picture of a picture. Okay, then I'm just going to use this for an example. And I think it's this one right here. But if the market pulls back and reaches my area inside a favorable large trigger, so the most basic rules say That's where the market is likely to continue, right? Right at that area, right inside of the areas inside of triggers. You're comfortable with that point, right? So my stop is initially going to go, what was the NASDAQ? I might give it a little more, 4 or 5 ticks outside of that window because my expectation is that it's going to hit either the highest to the lowest area and then continue on with momentum. And that's really what I'm counting on. So if it goes beyond this area, I just don't want it anymore. It's no longer where the market is likely to continue. It's where the market shouldn't go. And obviously, this was a management opportunity. So once my initial stop is there, then I wait for a reversal bar in the direction of the trade. And then once I have that reversal bar, I'm going to move my stop about 2 ticks below it. And what this does is Gary, I'm literally $50 risk, $40 risk at this point. And then when the second divergence prints, if I can't move it fast enough, I only lose a couple bucks. But once the second divergence prints, I'm probably going to exit the trade. Because now the other side of the management is I have to be a chart reader and recognize potential change. Does that make sense? And I'm looking to see if we have a high probability trend trade, and that one is freaking beautiful, right? So Gary, if we're getting in with odds favorable, there's our pullback right to the mid band, right to the one-to-ones inside of favorable large triggers. Your initial stop is about right there where the market shouldn't go. And then once the reversal bar prints, my stop is 2 ticks above it. And I'm probably taking my first profits at this divergence low. And then with this momentum and everything down, I'm going to the fib on my second contract. Does that help a little bit? And I think that the key to management is understanding where to get in. And I'm going to get rid of all these circles and I'm going to show you some of the challenges. So I know that you said that you're good, but this is for everybody because everybody's important. Let's get rid of all those circles and take a picture of it. Actually, you know what? Before I do that, let's make it a little easier to read. Here we go. And you know what? And Gary, that's the second piece of the puzzle. And that's one of the things that my brother and I talk about a lot is most people can get into the market at the correct spot quickly. Most people can identify where it's likely to continue and take that entry. And it doesn't take people very long. Um, and the other half of limiting losses is being able to hold for profits, right? So when you get in at the right spot, you've already started limiting losses. And I think that's what I really want you guys to recognize is that if you're in selling high, you're limiting losses already before losses are ever taken. And then when you have this pragmatic plan, so Gary, until you're really good at chart reading, if you're in at 52, or is that 62? That's 52. If you're in at 52, 47 is $100, 42 is $200. And if you find yourself moving stops arbitrarily, if you find yourself getting emotional, those two stops are a $300 trade, right? With every advantage, the perfect entry, the tiny little bit of risk, that's a $300 trade. And then what happens as you grow with the software, I love management lessons because I think they're so important. So when you grow with the software and you start to recognize that this is the best look and this is the best look, well, now your first target is down at the first amount of trouble, right? And that's a $200 trade on the first contract. And then you look left and you see all of this crazy momentum. And then your second trade comes off down here at 32, which is $400 worth of profit. So you've just gone from 300 to 600 on the exact same trade with the exact same advantages, but you've just incorporated a little bit of chart reading, right? And this lower divergence doesn't scare us. And if anything, that first contract that you just took off, you put back on at the mid band inside of favorable large triggers with odds favorable momentum and a clear path. But do you see how you have to be able to think in the moment? You have to be able to read your charts pretty quick. And most importantly, you have to have a very solid plan for exit. You have to have a reason why. And I think that's what we're able to do is until you've got a very solid plan, I'm able to give you a plan with all the reasons why, right? Why would I exit a trade on a high probability trend trade as a brand new user? Well, because I reached $100 and $200. Why would I do it on a 50-50? Because I reached my trouble spot because I hit my second contract. And then from there I go into, all right, now I'm a chart reader. With this look of momentum, I'll exit my trade if I get two higher divergences. If I never get it, I'm going to continue with the momentum or wait for a weakness. And these pictures are great. And if I'm getting out at the first trouble spot, and this was only one contract, well, then I can hold my second contract for bigger moves. And it's this where you build from one and go to the next, but everything revolves around great entries. Everything revolves around getting into the market at the correct spot, and it just makes it easier to get paid. There's that termination, weak triggers, once again, right into the mid band. And those large triggers are backed by the reversal bar. In the NASDAQ, the small triggers are down strong, creates an opportunity. So Gary, I hope that was helpful. I hope it was helpful for everybody listening. And I think that we discount the importance of management a lot. I think we focus so heavily on our entries that we forget that we have to do something great with it. So it's one gets to the next, right? I always joke that it's like eating an elephant, and you can only do that one bite at a time. And your first bite has to be recognizing momentum. And your second bite has to understand when the path isn't clear. And your third bite has to be making sure that you can pinpoint where the market is likely to continue. And then your fourth bite, 4 bites in, that's where you start doing great things with those entries. So it is definitely a process. And you can shorten the time it takes for that process to come to fruition simply by keeping it simple, by taking a bunch of pictures, by participating in class. And guys, this class isn't just for you guys that are brand new. This class is for you guys that are 3 years in trying to figure it out, right? I'm in the momentum phase, but I've got divergence when my large triggers haven't broken the area. I've got one-to-ones inside of trigger lines, but I've also got my other set of triggers all the way up here. We'll see if it comes back and closes the gap, and then we'll just kind of reassess and see what's happening. So um, I do the same thing every day. For those of you that sat through my first hour, is the momentum phase clear? Am I able to relay that pretty clearly on that best of the best look that we're looking for? The idea that we can say odds favorable momentum, right? We can say that your best look is strong triggers, smalls outside of the large for the high probability trend trade. But it's that look, all it is. I think that if you speak to it in terms of a momentum phase, it's a momentum phase, and all we're doing is taking momentum-based trades. Then it gives you this great look, and when you understand the relationship of the bars to the triggers, whether it's the large triggers or the small triggers, what it's going to do for you is it's going to open up the door. This is the momentum phase on the small triggers. And look how it pulls right back to the large triggers and the synthetics and right back to the small triggers. And guys, this is Nexgen's trade from 2004, getting you into the market right around here and pushing you down to there to give you a great shot at success. So it's been kind of fun putting it all together. It really has. And it's the exact same stuff. We're just saying it a little different. We're going to see if we can make it easier. And I'm going to create something with my brother so that if I handed you this sheet, and I'm doing it, I'm sending it to my kid. If I handed you this sheet, would you be able to find a high probability trend trade based on the information that I just gave you? Would you be able to go back to your charts and circle tails in the momentum phase, right? Would you be able to circle a tail in a momentum phase? And based on the understanding, the simple understanding, could you develop the confidence to get into the mid band at the triggers to continue down with momentum? And that's kind of my hope for you guys, is that you're able to do that you're able to keep it simple, to keep it focused. Guys, we've got a few minutes left. Is there anything you'd like to discuss? Three divergences. Are we good? We got our little management lesson, guys. We got our momentum phase lesson. We got our pullback lessons. Steve showed us, even with a different looking strategy, that momentum is the key to success. So, Steve, I really do appreciate that you posted that one, because all it did was validate that momentum is killer. Um, and there's so many people at so many different levels. Do I want to video from this AM? Did you video your trade? Do you really? What a great tool. You're welcome to share it if you want. Um, you don't have to. There's no obligation to, Steve. There's so much to look at, it might confuse. Is it? Share it. And then, guys, if you want to look at Steve's trades, feel free. I don't know that I can show it in Discord, though, and still get it to come up the way I need it to. Whoops. It's a YouTube link. Drop it in. What a great way to finish class. And then you guys will have to tell me if you can hear it or not. Do you talk yourself through the trade? Ron, have a good one, man. That's one thing I love. Oh, it is silent. It just watches the whole thing. Maybe I can narrate it. Let's see. Whoo. 21 says down. 34 says down. Everything says down, doesn't it? Momentum, 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 momentum. Here comes a pullback on a smaller, faster chart. Momentum, momentum, momentum. Oh, you went long. Momentum phase on the large chart. This is hard for me to read, I'm not going to lie. Oh, that was the short. Okay. That's hard for me to read. Steve, I'm not sure I could do what you do, brother. Off the mid band. You're in the short. Your 34 says down. Yeah. Not gonna lie, that one's tough for me. I'm such a two chart guy, three chart guy. I struggle with that much stuff. I'm impressed with you guys that can do it. But I'm also the guy where I can't hear my kid talking next to me on the couch if the TV's on. So um, it's tough for me. I can't pat my head and rub my belly. Chewing gum and walking is a pretty tough Tough deal. Guys, notice how your divergences are ascending rather than a second lower. That's a pretty good indication that divergence isn't going to ruin the party. There's that momentum. Hit the midband. And then three divergences in the same price range may terminate the trend. Momentum phase on the small triggers, weakness phase on the large triggers. That's a tough look, right? Do you fight momentum? I don't have rules met. I don't have rules met there. Can't go short with a green background. Large triggers up. Can't really go long against that momentum. So maybe I just wait for a second, let them fight it out. Never a bad thing to do. So when you're in a funded account, TLC, what happens is when you get over, I want to say 2,500, your trailing threshold moves to $50,100, right? So you could withdraw, but then you're going to have a $400 stop loss. Would you want to do that? Do you know most people um, only take one withdrawal on Apex because they cut themselves so short. They don't give themselves that cushion anymore. So technically you could do a PA account and you could go through and you could do it, but that's on you. That's up to you. Do you want to work with a $400 stop loss? Yeah, I wouldn't either. That would be a tough one. So, um, but yeah, I think technically you can. Small trigger momentum for the win. I believe you have to. I know it's like the first and fifth every month, and they only let you do 2,000. I've always just said I'm gonna recreate the um, the exercise, the evaluation before I think about it. But yeah, again, these are all Apex questions, guys. I try not to answer too many Apex questions because if I make a mistake, I don't want you to hold me liable. Um, but I do have all sorts of stuff. The first payout, minimum of 10 trading days between the payout requests. Um, and I've read all this so many times. I just want to double check. Let's see if it says first. No, it's okay. I like the random questions because I just, man, when I learn one thing, I just forget other stuff. So I just don't want to. I don't want to give you the wrong one. That's about actually. That's the schedules, but I bet you there's probably something in there. Don't ever be sorry for asking random questions. I just apologize that I don't have the answer for you right off the bat. Um, but if I get it, I'll share it tomorrow. I'll ask around. I'll look for some stuff. We'll see what we come up with. So anyway, guys, that's it for me today. That's the day. We made it. We survived it. We did all right. Thank you for being here. Thanks for taking the time to show up. Thanks for taking the time to post charts, to ask questions. We're going to do it again tomorrow. Um, and guys, if there's things that you want me covering, right, something specific, make sure you ask. I'm willing to cover anything. I'm better at covering things next gen, but I'll look for answers with you on other stuff. Um, you bet. And that's going to change, Joel, but there's a lot of great information in there. It's going to change and get easier to read, but there is a ton of great information in there. So the YouTube video will be